Patrick Dixon once said, "In banking, trust is the only thing that you have to sell." In today's time, with the growing development in technology and infrastructure, there have been initiatives that have been taken up like Bitcoin, cryptocurrency, and many implementations for investing and saving to make it more easier. But there are people who still follow the traditional banking system for investment, for loans, for savings, etc. Interest rate is the amount a lender charges the borrower and is the percentage of the principal the amount loaned. An interest rate can also apply to the amount earned at a bank or credit union from a savings account or a certificate of deposit. We'll also talk about how banks are actually fooling the customers or the interest rates are actually benefiting them. Interest is essentially a charge to the borrower for the use of an asset. Asset can include cash, consumer goods, property, vehicles, etc. And because of this, interest rates are thought of cost of money, and higher interest rates can make borrowing the same money being more expensive. India's largest private sector lender, HDFC Bank, has again increased its fixed deposit interest rates within 1 week of doing the same. The HDFC Bank FD rate hike is applicable on deposits less than Rs 2 crore. HDFC Bank FD rates have increased from 2.50% to 2.75% for tenures between 7 to 29 days, which is a 25 basis points increase, and the lender hiked the interest rate on fixed deposits maturing between 30 to 90 days by 25 basis points from 3% to 3.25% now. Bank accounting was created to make things smoother. Back in the day when run on the bank was a persistent danger, loan loss provisions were created to make things smoother during a recession. Emboldened by easy money, easy rules, and zero interest rates, bank risk-taking has expanded dramatically to even greater levels than the financial crisis. For the purpose of loans, the interest rate is charged on the principal, that is the amount of loan, and the interest rate is the cost of debt for the borrower and the rate of return for the lender. But the amount to be repaid is more than the borrowed amount because the lender has to pay the compensation for the loss of use of money during the loan period. The lender could have invested the funds instead of providing a loan during that period, which could have generated income from the asset, and the total repayment amount which is the difference between the sum amount and the total repayment amount is the interest charge. And if the borrower is at low risk by the lender, the interest rate will be low, and if the borrower is at high risk by the lender. Did you know earlier banks used to pay an interest rate of 4% per annum against the lowest available balance in the account between the 10th and the final day of a month? Any deposits happening during this period were not eligible for interest rate calculation of that month, but at the same time, withdrawals during the period were taken into account. Rate of interest will be high, which is actually telling the high cost loan. There are certain countries who will charge you for depositing your money, and also the interest rate on savings account is so low that it's ridiculous to keep your money there. That is why some people have a 3-month wage and then they invest the rest. The banking sector profitability increases with interest rate hikes. The banking institutions such as the retail banks, the commercial banks, the investment banks, the insurance companies and the brokerages have higher cash holding due to customer balances and business activities. And if there is an interest or hike in the interest rate, the yield of this cash will increase and the proceeds go directly into the earnings. And the people who are benefited from the interest rate hikes are notable: the brokerages, the retail banks, the regional banks, etc. In today's time, to replace the traditional banking system, decentralized finance (DeFi) is an emerging financial technology based on secure distributed ledgers similar to those used by cryptocurrencies. The system removes the control banks and institutions have on money, financial products, and financial services. Some key attractions of DeFi for many consumers are: it eliminates the fees that banks and other financial companies charge for using their services. Secondly, you hold your money in a secure digital wallet instead of keeping it in a bank. Thirdly, anyone with an internet connection can use it without needing approval. You can transfer funds in seconds and minutes. It's very necessary for you that your money is invested in safer hands on which you can rely on easily, and therefore trusting the newer implementations like cryptocurrency, Bitcoin, DeFi, etc. are which you can trust on and invest your money easily. Please don't forget to like, share and subscribe to our channel, and also don't forget to hit the like button.